Joining us right now, the reporter behind that story, ProPublica's Robert Fatecchia. I apologize if I've mispronounced your name, Robert, but I got to tell you, this story was so fabulous. I was so fascinated by what was happening here. And I don't think people even know about the rules. There's obviously insider trading rules about trading in your own company, but you're revealing that folks are trading in their rival's company in large part because it looks like they probably know what's going on over there. Tell us more.
Yeah, so we have obtained this massive trove of IRS data in addition to information about, how the wealthiest Americans are paying their taxes. It also comes with this massive subset of personal stock trading data. And as we started going through it, one of the first things we noticed was time and again, top executives across multiple sectors are trading in their competitors' stock in massive quantities, sometimes with remarkable timing. And so we have, we took particular examples to experts, to, former DOJ folks, former SEC folks, and, they're extremely troubled by this because, as the CEO of a company, you necessarily, at times, know non-public information that relates to your rivals and your partners.
So the question, though, is this information that even the IRS doesn't, or the SEC, I should say, doesn't have. Now that it's out, do you think that this should change the rules? Do you think there's a regulatory shift that should happen as a function of this?
Well, I mean, that's not for me to say. I do think that the response from folks who were at SEC and DOJ is very interesting. We talked to the former chief of the criminal fraud section, and he said that if he was still at Main Justice, he would investigate based on our findings. The former chairman of the SEC told us that, executives at companies just shouldn't be doing this. They shouldn't be trading in companies that they could be, argued to have non-public information about. So,
but the question, therefore, becomes, should this be a law, a rule that's enforced by the SEC? Should this be self-governed, if you will, by the boards, public boards? By the way, I mean, what we don't know is what's going on in the private market universe, right? I assume a similar thing very well may be happening.
Well, I mean, when you talk about a new law, I mean, this is something you probably know, but most of the public doesn't. There is no specific statute that defines what insider trading is. The rules around that have mostly been developed by regulators and by judges. And a lot of those rulings have been very defendant-friendly and have made insider trading harder to prosecute. And so a lot of these trades that we look at, the experts we talk to, they said, they could very well be legal. There are multiple elements you have to meet, and the definitions of these elements are sometimes very squishy.
Robert, I thought to myself, and maybe you're going to think I'm extrapolating in a sort of odd direction, that if you were a shareholder of one of these companies, that you might actually have a fair lawsuit against the CEO for making those trades and effectively misappropriating information that would have been ostensibly to benefit the corporation that was used personally. What do you think?
Well, I mean, you bring up a good point, right? A lot of these executives are compensated with stock of their own company, right? And the idea behind that is that you're incentivizing them to want to maximize the profits of your own company. But if you've got, if you're an executive and you've got this secret hedge where you also own shares in your competitor, you've potentially got a conflict of interest there, right? One of our examples was an executive at a mortgage servicing company. And at the time, one of the big banks was auctioning off rights to hundreds of millions of dollars of mortgages, right? And, these two companies were competing, and his company lost out. But very soon before that, he had bought shares in the competing mortgage servicer, and its stock skyrocketed. So even though the company lost, he won, took in a huge profit, immediately sold the stock.
Two quick questions, Robert. One is, do you think you actually were able to catch all of the suspicious trades that existed? It appears that what you did was run an algorithm of some sort over all of this data trove that you folks have collected to try to identify these things. But there were certain thresholds I think you were using, and so I wondered whether there's stuff just under the threshold that you think was missed.
You know, we spent a lot of time combing through this data, but it's a massive data set, and without a doubt, there are interesting trades we did not catch. I know for a fact there are interesting trades that we have not yet reported.
Right.
We have
I knew there was
more stories in the works.
For a little tease for more stories coming.